Hi, Terry Ryder from Hotspotting. I want to touch on one of the prevailing myths that prevails in real estate, and that is that you should always buy in the capital cities because capital cities always show better capital growth than the regional centres. And like a lot of generalised commentary that prevails in real estate, this one's a bit of furphy. It may be generally true, and if you look at average growth rates over a period of time, the capital cities will usually, but not always, outpoint the regional centres. But we're not interested in generalised situation. We're interested in the individual situations. And a case in point right now is the city of Newcastle in New South Wales, where a capital growth in the last couple of years has been quite extraordinary, particularly in the last 12 months, for local economic reasons, but also perhaps catching the wave from Sydney, and also as a result of being seen as an affordable alternative to Sydney, but not too far away from Sydney. But in the last 12 months, virtually every suburb of the city of Newcastle has had double-digit growth in its median house prices, and there are at least 7 or 8 that have had 20% or more growth in their median prices, including a couple that are above 30%, which is amazing growth by anyone's standards, certainly higher than what we've seen recently and even in Sydney and Melbourne. Those really big growth rates have been mostly in the more expensive suburbs, and part of it is people, investors from Sydney, seeing value, comparative value in the Newcastle market compared to Sydney after 4 years of growth in the Sydney market. But it's also primarily driven, I think, by the strength of the local economy. Newcastle is a very underrated economy. It's very strong, it's very diverse. Obviously, it has strong connections to the resources sector, particularly the coal mining sector, but there's so many other factors driving the Newcastle economy and the Newcastle property market. I think the biggest single factor is spending on infrastructure and property developments in and around the city of Newcastle. Our location report that we have in our various top 5 reports for Newcastle, where we list the various projects and infrastructure developments that are going on in that location. The list runs to 6 pages in our Newcastle location report, and those various developments add up to investment totaling more than $20 billion, and that's the big driver of what's happening in the Newcastle property market with the big capital growth at the moment. For example, what's been spent at the Williamstown RAF base and airport, billions of dollars being spent there. But there's a great variety of projects on those lists of developments that are driving the economy of Newcastle right now. There are resources-related projects, there are transport infrastructure projects, there are commercial and retail developments, and there are residential developments and other types of developments, but well over $20 billion of investment. The only regional centre I know in Australia that's got anything to match that right now is the Sunshine Coast in Queensland. As a result of that economic uplift in the last couple of years, big capital growth in the Newcastle market, and as I said, 7 or 8 suburbs which in the last 12 months, including to the figures I have in front of me, have had growth in median prices of 20 to 30% or more. Extraordinary growth, and it just puts to light to that general myth that you're not going to get growth in regional centres to match what you would get in the capital cities. That's it for now. Talk to you later in the week. Terry Ryder from Hotspotting. Bye for now.